everyone, and welcome to this explanatory video which will describe step by step how we developed and now implement the numerical price prediction approach to trading. For anyone wishing to know on what concepts and principles the system was built, we would refer you to our introductory video titled Step-by-Step Trading for Beginners, an introduction to day trading with numerical price prediction. And since this is an instructional video targeted especially toward beginners, if we use any terminology with which you are not familiar, please feel free to pause the recording and research the topic using Google search, getliner.com, or some other similar service. This way the video will also serve to introduce you to concepts with which you probably really ought to begin familiarizing yourself. That being said, let's get right to it. The first step taken by Will Duckworth, the creator of numerical price prediction, on his way to becoming a profitable retail trader, was to learn enough MetaQuotes Language 4, or MQL4, to code the technical indicators he envisioned using on the MetaTrader 4 trading platform. You see, Will really liked the neatly regimented appearance of Heikin Ashi candlesticks, and how they made the direction in which a given asset was trending about as obvious as one could wish. Even so, he had a problem with them in that they hid the true value of each bar's open and close. To demonstrate what we mean, we have superimposed an outline of each Heikin Ashi candlestick from the upper image over its corresponding standard candlestick in the lower image. This clearly reveals how the tops and bottoms of the corresponding candlestick bodies do not match up. To address this problem, Will envisioned a moving average that evidenced the same neatly regimented appearance of Heikin Ashi candlesticks that he could plot over standard or traditional candlesticks to enjoy the best of both worlds. To fill this role, he downloaded an indicator called the whole moving average, which supposedly reduces the lag that characterizes standard moving averages. It is the whole moving average that you see pictured here. However, it is quite evident from this image that the behavior of this indicator is a bit bizarre. More specifically, note how swings in the line sometimes overshoot candlesticks so that it does not always match up well with the Heikin Ashi candles. He therefore continued his search for a more satisfactory solution and soon discovered what's known as a zero-lag moving average, which he thought might do the trick. It is plotted in purple on the image you see here. But again, as this figure illustrates, the zero-lag moving average does an even worse job of tracking Heikin Ashi candlesticks. Given that there were no available moving averages which did what he needed them to do, Will decided to begin the process of learning how to program indicators for himself in the hope that he would be able to design tools that would actually behave in whatever manner he envisioned. After learning barely enough coding to get by, he designed an indicator which he calls his instantaneous moving average. It is the bold black moving average you see plotted on this chart. It is quite easy to see that this proprietary moving average mirrors the directional maneuvers of Heikin Ashi candlesticks much more closely, significantly better than both the whole moving average and the zero-lag moving average. So again, Will's first step to becoming a profitable trader was to learn enough coding to enable him to create the proprietary indicators he envisioned. And he was now able to see each candle's true open and closed while at the same time benefiting from looking at the kind of orderly, neatly regimented graphic previously offered by Heikin Ashi candlesticks and, in fact, at NarrowGate trading. We now have 4 versions of this measure. So then Will's next step, or step 2, was to convert moving averages from numerical units into temporal units, from a given number of periods to a given number of minutes, hours, days, weeks, or months. This was necessary in order for Will to trade with the clarity and precision he desired, for him to be able to answer such questions as, what moving average best conveys in which direction and by how much price moves every 5 minutes, or every hour, or even every day. In temporal moving averages led to step 3, which was to determine the definitive baselines and price flow envelopes for whatever style of trading one is using, whether day trading, swing trading, or position trading. We typically use 3 main channels. The outer channel, surrounded by the white background, conveys the gist of the rate's general overall directional flow, where it is ultimately headed in the long run. It has 2 levels. The outer band is set at what we have determined to be the maximum deviation level that rates will distance themselves from the advancing side of the underlying moving average. This tells us where we should seriously begin considering pocketing our gains if we are already in a position, not to mention where it would make little sense to enter new positions given the lack of room to continue climbing or falling as appropriate, would render the limited potential reward not worth the considerable amount of risk. The inner bands serve as pullback thresholds and what we call statistical support and resistance. If a pair is trending, price tends not to breach the contrarian side of the outer channel at these inner bands, at least not for very long. If they do, this signals us to the fact that the gist of the general overall directional flow of the corresponding asset is probably reversing direction, which is confirmed or validated once the slope of the outer envelope is pulled in the opposite direction. If the envelope is not pulled in the opposite direction and price bounces off or is rejected at these statistical support and/or resistance levels, they constitute excellent entry points for entering new positions. We then have an intermediate price flow channel, the contrarian side of which constitutes a less radical pullback threshold, so that it too constitutes statistical support or resistance and sounds the alarm alerting us to the likelihood that the intermediate trend is changing its bias or sentiment. We have colored this channel dark blue. And our last main channel is colored lime green. It begins to track pullbacks and oscillations within the slower channels along with its white baseline, with the aid of even faster measures such as the chocolate and indigo envelopes and the yellow and crimson baselines. Of course, we don't actually refer to these measures by color, but rather by the price action they track, whether it is the 12-hour envelope, the 5-minute baseline, or what have you. For example, note how the green envelope popping out the backside of the blue envelope suggests possible ideal opportunities to enter a new position headed in the direction of the dominant trend. Perhaps this represents 5-minute price action oscillating inside a 30-minute price range envelope or something of that sort. In this way, we know precisely how to interpret what rates are doing, thus removing almost all confusion or subjectivity that might enter into the decision-making process. Potential entry levels include 1. When the fastest baselines and envelopes confirm that rates are coming out of pullbacks at or behind the baseline, which underlies a sloping global envelope. 2. When the fastest baselines and envelopes confirm that rates are coming out of pullbacks at the contrarian side of the blue price flow channel. And 3. When rates are rejected at the upper or lower band of a neutral global envelope, or the contrarian band of a sloping global envelope. Note when the black oscillator is on one side of the price anomaly channel and the blue or both the blue and green histograms are on the other, one is looking at a potential trade opportunity. Note also how when the slope of the global price flow reaches a designated threshold level, it suggests that the odds or probability that entering positions headed in the corresponding direction will result in successful and profitable outcomes is much greater than 50-50. This is what we mean when we say we trade by the numbers, and that our systems almost completely removes any confusion about which direction to trade, when to enter and exit positions, and when one should refrain from trading and simply sit on the sidelines, waiting until better trade conditions present themselves. So, in summary, the step-by-step assignments any beginning trader would need to carry out if he or she wished to take the path to profitable trading taken by the originator of numerical price prediction would be to first learn enough code to be able to create whatever previously non-existing indicators are deemed necessary to trade in the style and manner envisioned. Second, convert moving averages and moving average envelopes from numerical units into temporal units so that you can define price action with the kind of precision, accuracy, and clarity needed to understand what is going on from a standard, everyday, common sense kind of viewpoint. Third, determine the definitive moving averages or baselines and moving average envelopes or price flow channels for whatever style of trading you will be using. And the fourth and final step would be to quantify the settings and parameters constituting optimal trade conditions, including the minimum threshold levels for the rate of change or slopes of key baselines and price flows you would have to observe before even considering entering the market, designated levels of statistical support and resistance, and lower panel settings for when to enter positions as rates are coming out of pullbacks against the dominant trend. It is by establishing these kinds of objective, quantitative rules, guidelines, and conditions that one can transition from a so-so trader to an objective, disciplined, logical investor or speculator able to navigate the waters of the financial markets in a manner leading to consistent and sizable profits. And with that, we hope you found this video helpful, and if you have any questions, please be sure to leave them in the comment section below, and we will get back to you with an answer as soon as possible. In the meantime, we wish you all the best of luck, and may the peace of God be with you. Bye for now.